Election season is in full force, and the presidential election is just days away. That's why today we're talking about the tax plans of Kamala Harris and Donald Trump in the race for the White House. And why taxes? According to LendingTree, taxes are the third expense American households have every month, to an average of $784, and both candidates are rolling out their plans to win over voters' wallets. So let's see who's promising what and how it could hit your bank account. All right, let's start with Kamala Harris's plan that you will see on the screen with the month it got proposed. We got a lineup of tax relief proposals mostly aimed at middle and lower income Americans. We're talking about extending the 2017 tax cut plan proposed by President Trump for people earning under $400,000 a year, increasing the tax child credit from $2,000 up to $3,600 and even $6,000 if you got a kid under one. There's also some love for workers with proposals to expand the earned income tax credit and extend tip wages from income taxes. Kamala also proposed to make the Affordable Care Act tax credit permanent and throw in a $25,000 credit for first-time home buyers, as well as provide a new tax credit for home construction and rehabilitation. And finally, increase the startup expense tax deduction to $50,000 from $5,000. But wait, because Donald Trump also has his tax plan, which I'll be putting on the screen for you to compare. So let's start. His big move, making his 2017 tax cut permanent, because those are set to expire soon. He also wants to cut the corporate tax rate down to 15% from 21% for American-based manufacturers. He also wants to get rid of the tax on Social Security benefits for families. He wants to raise the child tax credit to $5,000 and offer deductions for newborn expenses, as well as his proposal of free taxpayer-paid in vitro fertilizations for those couples that can't have naturally a baby. For the American worker, he wants to eliminate tax on tip wages. He also wants to eliminate taxes on overtime pay. He wants to end his 2017 tax law that capped $10,000 on deductions for state and local taxes. He also wants to end double taxation that exists for Americans living abroad. So if you plan to retire in Mexico, Costa Rica, Italy, or any other part of the world, you won't get double tax if you're an American citizen. He also wants to provide a tax deduction for the total cost of home generators bought since September 1st. And this is due to the deadly hurricanes we see every summer here in Florida, Texas, Georgia, and the Carolinas. Finally, he wants to provide a tax deduction for interest on car loans. Now, here's the kicker, the price tag. According to the Committee for a Responsible Federal Budget, Trump's proposal could set us back more than $9 trillion over the next decade. Meanwhile, Kamala's plan is not cheap either, because her proposal is set to put us back more than $5 trillion in the same period. But both Donald Trump and Kamala plan to counter this deficit with a set of actions. For example, Trump is proposing a universal tariff on imported goods of up to 20% or higher. This will raise at least $2.7 trillion over 10 years. On the other hand, Kamala is calling to reverse Trump's 2017 tax cuts for families earning $400,000 or more, which means that all you doctors, lawyers, tech people, high-earning individuals, and families where income is higher than average, for example, in states like California, New York, and Massachusetts, that tax break will be over. Also, she proposed to raise the corporate tax to 28%, and that includes small businesses as well. Lastly, she wants to increase the capital gains tax to 28% and a never heard before tax on unrealized capital gains of 25%, which business people like Mark Cuban, one of her supporters, have said this will be devastating for the economy.
On this unrealized tax issue, gain issue, and where we've talked about, those who are taking loans against their unrealized stock, et cetera, et cetera. And then they say, well, if you start to tax that, we won't be able to make investments in startups. We won't be able to give money over to venture capitalists and private equity folks and other things like that. What's your feedback to that distinction? Because I wonder, once there's a critique of one, then of one policy, and you get rid of that policy, then of course it moves to the critique of the next version of it.
Well, of course, but okay. So what I told him was, if you tax unrealized gains, you're going to kill the stock market. Right. And it's going to be the ultimate employment plan for private equity, because companies are not going to go public because you can get whipsawed. Right. I mean, my own personal experience back from the internet days. Right. All of a sudden I was cash poor, but equity rich. Right. My net worth was enormous, but the number of dollars in the bank wasn't enormous. And so I'd have, based off of the unrealized gains, I would have had to borrow money. And I effectively would have been in hock just to pay my tax bill instead of trying to run my company, and 1,000 other reasons, right?
So all these will raise, according to the Committee for a Responsible Federal Budget, $4.3 trillion over the next decade. Of course, it's not just about promises. Congress will have a big say in all these and in what gets passed. So tell me, which tax plan gets your vote? Which tax plan is better for you and your pocket? Drop me a comment below with all your thoughts. And don't forget to like and subscribe if you got any value from this video. And if you like this, I'm pretty sure you'll also like this video on the screen. In the meantime, take care everyone.